Hello and welcome to THINKpod, powered by the FII Institute. I'm your host, Mark Barton, and for over 2 decades, I've been at the forefront of global conversations on the issues that matter the most. In this series, I'll be meeting with the leaders who are rising to tackle the grand challenges that face humanity right now. Together, we'll be discussing the radical ideas and transformative solutions that'll benefit both people and planet. In this episode, we're joined by Uwemakpan, Vice President of Ingressive Capital and a mentor for underrepresented founders. Uwem proposes an alternative to the Silicon Valley mindset, a form of entrepreneurship that's collaborative, not competitive, committed to sustainable value creation, and set on empowering the next generation of African innovators. Uwem, thank you very much for joining us today.
Thank you for having me.
The world is confronting COVID, climate, and geopolitical risks. How is Sub-Saharan Africa rising to those challenges?
One interesting thing about Sub-Saharan Africa is the entrepreneurs, the founders that are bridging the gap and building solutions that the government has failed to build over time. And what we're seeing is founders are either reinvesting in newer founders or founders are actually just digging deep and building the infrastructure that will help development across the continent of Africa. So I would say one thing that stood out, right, is the founders. More challenges, more opportunities to build, more opportunities to grow.
Yeah, and more challenges to source capital, or is the sourcing of capital getting easier?
So it's an interesting thing here, right? For growth stage companies, depending on where you are, it could get quite difficult sourcing capital. But what we've seen is more capital year on year has been poured into Africa, and I don't think it's going to slow down because if you look at the rate of returns compared to, say, Europe and America, it's still quite high.
What are the rate of returns? I always love numbers.
I wouldn't give those numbers, but I'll tell you that it's cheaper to get into a deal in Africa compared to Silicon Valley. So a seed stage deal will probably cost you, would be about $20 million valuation. In Africa, you get it as cheap as $5 million. So it's lucrative to get into deals in Africa. Yeah. What would happen is founders would probably raise slowly as compared to when we came out of COVID, where there was so much surplus cash and gunpowder and everybody was just raising. VCs are going to be very careful with who they're investing in. But I don't see that funding in Africa will slow down because the multiples you get in Africa compared to outside the continent is still quite lucrative for a lot of the VCs.
And where is the money coming from? Where's the capital coming from? And do you prefer external capital or local capital?
Personally, I prefer local capital, but we need to understand that Africa itself is still emerging. So the traditional institutions like the pension funds, the family offices of the high net worth individuals are still not used to VC as an asset class, right? They're used to the traditional oil and gas and all that. So because it's more risky and because it's more long-term, they prefer short-term investments. However, most of the capital is coming from the US.
Yeah, most from the US. How can you then encourage more local capital, if that's the type of capital that you prefer? What needs to be put in place to encourage that capital?
Simple, more exits and more M&As.
Yeah.
And as Africa matures, we're going to get more exits. In 2020, we had an exit from a company that I'm proud of because we invested in. Paystack exited to Stripe. And it was interesting because Stripe looked at the African market and said, hey, rather than we investing in coming into the continent, why don't we just acquire a market leader? And we're going to be seeing more of that. And that's what makes Africa very lucrative. So instead of burning cash and trying to set up new offices, we're going to be seeing more acquisitions across the continent. And more acquisitions make the VC space or startup space very lucrative for local investors because who doesn't want to make money, right?
Yeah.
So just more exits.
Where are you excited? Because traditionally you're technology, but you're venturing out, aren't you? You're expanding into other sectors. Why the initial focus on tech and why the expansion, into other sectors, and which sectors are really exciting you and which sub-Saharan countries, markets as well?
There's still going to be a strong focus on tech. What people define as tech would definitely be different for different people, right? But I'm big on technology that helps people scale, technology that helps companies reach more people, technology that makes living easier, right? And that's why there has been a focus on fintech. Payments, moving money around across borders, outside the continent has been very, very problematic over the years. And there are million and one solutions trying to solve the same problem, even with cryptocurrency, but I'm not going to go into that.
Oh, you can. Are you there with crypto? Are you there, or are you in the middle?
For the African case, I think crypto is a very, very use case, because moving money, helping people pay for goods and services, say you want to pay for your supplier in China, or you want to move money to your brother in Congo, cryptocurrencies make it so easy to do. So the use case for Africa is way, 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 way more important for me.
Are we going to see more countries follow the Central African Republic and recognize Bitcoin? We had El Salvador. We're waiting for number 3, aren't we? And number 4. Is Africa going to be the place which really adopts?
It's a bit tricky because traditional banks have made so much money over the years, and anything that looks like is going to push them off their stead, they would all typically push back on. But I think that adoption will continue rising. If you look at Nigeria as a very good case study, once there was a ban, adoption went up.
It tends to, doesn't it? Wherever you ban it, it's a good thing.
It went up because there is still a critical problem that exists. The payment infrastructure doesn't work. And so people will look for the next best solution. Fintech has been the darling of everybody because it's post-COVID. People could just raise money every 6 months, high valuation multiples, and yay, we have made money as an investor. But there are various other sectors that are very important. Education is a sore point in Africa. So figuring out how to reach the mass market in terms of education, edtech, would be great.
Are you investing in that space?
Yeah, definitely. Healthcare is one of them.
Yeah.
The patient-to-doctor ratio is abysmal. So we still need that infrastructure that will help the low amount of medical services or services outside the continent to reach the mass market in Africa. A lot of investment has gone into mobility, but we are now seeing people focus on the supply chain. So how do we move goods from the farms to the supermarkets to the customers? So those sectors are really going to get a lot of investments over the next few months, years.
How is Sub-Saharan Africa coping with rising food prices, inflationary risks, with the backdrop of this, geopolitical environment, given the difficulties already prevalent across the region? How is it coping right now?
To be honest, many African governments didn't plan for this. We are notorious for not planning and just being very reactive. And so what has happened is people are trying to think on their feet and solve the problems. People are looking for substitutes. So what is a substitute for wheat in Nigeria? You'd probably say yam flour or something else, right? So people are looking for local substitution. People are also investing in local production. Obviously, we know that local production might not meet the need of the whole population, but will alleviate some of the problems. And so there's more focus on using tech for local production, ensuring that there are no post-harvest losses, ensuring that storage and cold storages are working better and more efficiently. Private sector is leading in this, so, and which is one of the things I advocate for. Unfortunately, on the African continent, we cannot wait for the government. Private sector, from the PEs, VCs, high net worth individuals, just businesses, have to take the bull by the horn and start solving problems for themselves.
Solve it yourself.
Yeah.
Separate to the government. You
Unfortunately,
can't rely on it. Is particular criticism pointed at Nigeria?
It's reflective. It's reflective of the leadership across Sub-Saharan Africa, to be honest. The government tends to be very apprehensive to change or doing things differently. And what happens is it is when the private sector begins to push that government wakes up to say, hey, let's form some sort of law or regulation to protect people.
So it does work. So if the private sector pushes...
It does work. That's why we have so many founders solving problems. The adoption of fintech solutions has just been a very good example of that. Young founders got investments from Silicon Valley, built out great solutions, and then the government says, oh, this looks good. How can we regulate this and how can we adopt this over time? And so we need the private sector, to keep on pushing and pushing, because we can't keep on waiting for the government.
So what more would you like? The Nigerian government are standing right there. What more would you like when it comes to helping entrepreneurs?
And the first thing is the government has no business doing business. And I'll explain. You can't be a regulator and a field player at the same time. And what we have oftentimes across Africa is government having some stake in every sector. And so they are regulators, but I also have this unfair advantage as a player. So we want government to step out of the way, allow people build. Obviously, regulations exist to protect the customers, right, or the consumers. So rather than just ban, figure out ways that you can build out regulations to protect people and stop them from losing money. Keep crypto. But yeah.
Can you help on the regulatory side? It's got to be a symbiotic process of the entrepreneurs, those startups, helping the government forge legislation and regulation.
Yes, definitely. A good example is the open banking in Nigeria. There's an open banking coalition or foundation in Nigeria. And what we've seen is private sector, businessmen have come together to say, hey, how can we allow data be readily available for this fintech, what we call them fintech bros, right? People building in the fintech space to build better solutions for the mass market, and government is part of that conversation, and government saying, okay, we'll allow this, but we won't allow this. And then, there's like some mediation and that works. So another advice to I usually give to founders is be friends with the government, right? Carry them along the way, because if you don't do that, they are quick to just ban and stop it entirely because they don't understand it. You have to engage, because most of them are from the previous era. They are not used to so many things that are now, and the default behavior is to just say, no, I don't want any of it.
How do we build the next generation of unicorns in Sub-Saharan Africa?
I think if you look at the poverty levels across the continent, if a founder wakes up tomorrow and has that belief that he can build the next unicorn, he puts his back into it and he's building and building and building. However, instead of focusing on providing value, there is more focus on multiples.
Is that the Silicon Valley sort of mentality?
Unfortunately, yes. That's some of the things.
So you don't want that mentality?
I do not want that. One of my friends, Bob Wheeler, told us something many years ago. He says the biggest mistake Africa will make is taking fundamental principles from Stanford and all and just applying it head on the continent. Yes, there are fundamental principles that work, but you need to look at the nuance of the environment you're in. If you're not focusing on providing value on the continent, you would struggle to build a company that would survive long term. We will not build a Google or a Microsoft in Nigeria if we're all focusing on multiples. It's not going to happen, because the fundamental of the business, the macroeconomic, the unit economics of the business has to be solid for you to build a sustainable business. And unfortunately, post-COVID, there has been less attention on the unit economics, on the annual rate of returns and those fundamental metrics that people should track, and more on what we say vibes, right? Oh, the founder can pitch so well. He went to Stanford. He can speak, right? Branding, and we have lost focus. And I think that's what this correction is going to do. Sort the wheat out of the chaff and ensure that the money is going to the right people that are actually creating real value on ground.
It has a wonderful history of venture capital, Nigeria. Just tell us why you're proud to be part of that history and how the VC industry has developed in your lifetime.
I'm not old enough to talk about the history of VC.
Yeah, but in your lifetime.
But what I would say is, back to the private sector. So VC started out with, the wealthy guys that had government connection too, saying, hey, how about we sort of spur the growth of the economy by funding local businesses? And then you had the crossover funds, like the Tiger recently, beginning to pour little amounts of money into local funds. But what I've seen is more foreign capital is coming in, because Africans are really averse to risk, to be honest. Think about it, you work so hard all your life for money, and you're not looking to just throw it at somebody who could burn through the cash in a month, right? To be honest, the stat says 90% of businesses will fail in the first year, and it's actually very true. So it's still a very risky asset class.
But that's the same everywhere.
And it's the same everywhere. The difference is we don't necessarily have that social net to fall back into. So if you lose everything, you really have lost everything.
Which is why the infrastructure is so important.
Yes, exactly. But in my lifetime, I've been proud to be part of communities of entrepreneurs, being part of founders who have actually crossed over from being founders to VCs themselves. Looking to spur innovation and spur actually development by investing in companies that are actually creating value on ground. And I've been also opportune to work or lead operations at Ingressive Capital. Ingressive Capital focuses on Sub-Saharan Africa, sector agnostic, but heavily tech-driven companies. And I've been happy to lead investments across Nigeria, Ghana, Kenya, closing a deal in Egypt. And it's just been exciting, the knock-on effect of this. A good example of what VC is doing in Africa is, for Ingressive Capital, we said, hey, we are a traditional VC firm, but we also we have a pipeline problem on the continent, right? After you fund these companies, where would they get the talent from? And so we said, we floated a new company called Ingressive for Good. It's like our foundation, where the focus is training people to increase their earning power. So basically, we've seen that if you train people in tech skills on the continent, their earning power doubles, triples, times 10. And so you see a traditional soap seller learn to code or build websites, and the next thing, she's actually earning $100, $200 per week. This is the same way people across the continent are solving problems. Yes, we're investing to make money, but what other social good can we do to help the development of the continent?
And you really feel that, do you, that there's a drive, a social drive?
Yeah.
So we're taking into account the SDGs.
Yeah.
Do you feel that there's a real belief in doing good?
Oh, yeah, there is.
Not just making money.
Trust me, money
good,
first.
Socially, economically, on the climate side.
Yeah, that's why I love being from the African continent, to be honest. There is this thing of giving back. Some people might still call it black tax, but there is this urge to always give back, to develop where you came from. And we're seeing that happen more and more. Even if there is a brain drain and you see a lot of human capital leave the continent to work in Europe, UAE, UK especially, what we're seeing is they are still building solutions for the continent. They are still sending money back, trying to get involved in initiatives that would develop the continent. And so, yeah, I mean, that term Africa Rising is literally happening in our face right now.
Yeah, it's which is wonderful to hear. I love to hear what you're doing, especially with the foundation. Just to give a stat for our listeners, Nigeria's population, roughly 215 million, seventh most populous country in the world. Let's not forget that. The median age, I didn't know this, the median age in Nigeria is 18.1 years.
Very young population.
You are doing a lot to empower the youth. Just tell us what you're doing and why it's so important to utilize young human capital.
Let's be honest, if the youths are not creating some sort of value, they're out there doing something. They're spending their time doing something. And unfortunately, over the years, because we're a very young population, the government has really neglected that, right? And so you see private institutions take it upon themselves to help as many young people as possible. Case in point, Ingressive for Good. And Ingressive for Good invest in trainings and partnerships that help develop and upskill. Upskilling is very important because I remember I talked about education being one sector that we need to improve on. We know the curriculum isn't good enough. How can we upskill them so that they become attractive to foreign companies like Microsoft, like Google?
Another thing you've done, you manage the largest Pan-African entrepreneurship program.
Yeah.
Incredible. You trained, you mentored, you funded 10,000. I mean, that's a big figure in 5 years. I mean, how proud are you of that?
I'm extremely proud. It was stressful because it was very ambitious. It wasn't something that was done before. And I remember when they called us to a room like this and said, hey, this high net worth individual said, hey, I have X amount of billions, and then it was $100 million, and said, you all figure out what we're going to do with it. I want to leave a legacy. I want to impact entrepreneurs. Go figure it out. And we sat down, and thankfully, then I had somebody, Paminda Ver, who used to be the CEO of the foundation, then said, how about we come up with a curriculum to train them in business, right? So a 12-week online program, pair them with a mentor from across the continent and across the world, and then help them build a business plan and then write a $10,000 check into them. And the first year, we thought, okay, we're just scratching the surface, nothing big. We got 25,000 applications from across the continent. We selected 1,000 people. Second year, we got 45,000 applications, and then we started getting partners, say the GIZ, which is a German development initiative, and the USAID saying, hey, we're also rethinking the way we're giving money to infrastructure projects. How about we give you more money to train more people? And so what happened over the last 5 years while I ran the program was that we scaled so fast that from training 1,000 every year, training, mentoring, and funding 1,000 every year, we actually did 10,000 in 5 years. It was no mean feat. It was a lot of work.
Would you do it again? You've done it. You've been there.
No, I've been there. I won't do that. But why this is actually impactful for me is even after leaving that program years ago, I still meet these founders pitching to VCs, and some of them have pivoted, but you can see the growth. And then they look at me and say, hey, I remember you led this and this is how this helped me. So you see, sometimes those little drops in the ocean, actually, it makes a good story down the line. And
it keeps you going as well. It nourishes you. And I've got your mission because it's on your website. This is, I'm sure you've got lots of missions. Help you find the clarity you need. This is when you're mentoring and helping people and advising on the business entrepreneurial side. Helping you find the clarity you need to build $1 million businesses. Clarity. Just describe what clarity is.
So oftentimes we have entrepreneurs, and this is a localized case in terms of African entrepreneurs, come to me to say, hey, I have this great idea. I want to build this thing. I'm going to change the world. And then you talk to them, and then what you realize is it's just their view of the world, right? It's just their view of the problem and not necessarily the customer's view or the market's view. And then helping them, dissect that down and breaking it down in a way that they can then build a sustainable business from is what I love to do, right? And it doesn't just stop there. Connecting them to the right kind of resource or, thought leader or anything that just helps them build a sustainable business, because in the end, it's about value creation, and not just value creation, sustainable value creation. I don't want you to build a business in year one and die. I want you to build a business that in 10 years' time, you're still proud of what you built. Either you've exited or the company is listed, it's as IPO'd, although we don't have that many IPOs on the African continent, but it's going to change.
Yeah, what a perfect way to end this conversation. Uwem, thank you so much for your time today. That was absolutely fantastic.
Thank you for having me.
So inspiring. In these turbulent times, don't forget to like, comment, share, and subscribe to ThinkPod for more insight and analysis.